Hey, good morning, everybody. Today is Wednesday, August 26th, 2015. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. After 2 days that saw the markets lose as much as 13%, it appeared that the market might rally yesterday. But stocks came into heavy selling in the last hour of trade and erased significant gains. The Nasdaq's now down more than 16% from its July 20th high. Trading volume, while high yesterday, was below Monday's levels. Is the selling over? I don't know. What I do know is that while not every follow-through day results in a bull market, every new bull market starts with a follow-through day. This one is going to be no exception. So there's no reason for bulls to be buying stocks until we see a follow-through day. What's that going to look like? A follow-through day is a day, at least 4 trading sessions from the market bottom, in which one of the major market averages increases by 1.25% on heavier trading volume than the prior day. This means that if we don't undercut Monday's lows, we could see a follow-through day as early as this Friday. All of the indexes we follow are now trading below their 200-day moving averages. Declining issues bettered advancers by 5 to 4 yesterday, a huge improvement over Monday's 20 to 1 edge. That noted, the New York Stock Exchange advanced decline line remains bearish and has been so since May. New lows continued to thump new highs. Our market timing model is on a sell signal. A sell signal indicates our stops should be at their tightest levels on any remaining long positions. We should sell any long position that, if sold at normal stop levels, would result in a loss. Traders may want to hedge their portfolios with contra ETFs, exchange-traded funds, while aggressive traders can sell short. The O'Neill market timing model is indicating a market in correction. Keep in mind that when the market's in correction, we're always just 4 days or less from a possible confirmed uptrend. It's in the midst of market weakness that new market leadership will emerge. So it's critically important at this juncture that we keep our watch list up to date. For the hopelessly bullish among us, small capitalization stocks outperformed large for the 3rd day in a row yesterday and are now outperforming on a 10-day moving average basis. Small caps typically outperform in a bull market. In spite of the down day in the market, the McClellan oscillator climbed from minus 104 to minus 92. While not exactly bullish, the McClellan oscillator bucking the market is an encouraging sign for the bulls. The put-call ratio, which hit 1.48 Friday, was 1.13 yesterday. The put-call ratio is a contrary indicator, and the last time it was this high was October of 2014, 2 days before the market took off on a 17% 6-week tear. Our swing timing model is indicating an extremely oversold condition in the market. Keep in mind, an oversold market can become a lot more oversold. In this weak and squirrely market, we should continue to err on the side of caution and continue to raise cash while we wait for confirmation of the next uptrend in the market. Okay, what we're looking at here is a list of Moody's 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market has been this week. In the past week, we've seen computer hardware and storage up 2.8%. Coal operations are only off 0.1%. Leisure clubs and facilities are down 1%. Food products wholesalers are down 1.6%. And other consumer products are down 1.9%. Let's take a look at the Nasdaq composite. Yesterday, the Nasdaq was down 19.76 points, or 0.44%. Nasdaq closed at 4506. We had an inside day yesterday, which means that the high of the day was lower than the prior day, and the low of the day was higher than the prior day. An inside day doesn't tell us much about the market, but it's worth noting. Trading volume yesterday was lower than the prior day, but continued to be above average. For you followers of William O'Neill, we are in a market in correction. We have been since August 21st. Right now, we are on a sell signal in the market. The sell signal indicates that our stops should be at their tightest levels on any remaining long positions. We should sell any long positions that, if sold at our normal stop level, would result in a loss. Traders may want to hedge their portfolios with contra ETFs, and aggressive traders can sell short. Let's see what the S&P 500's up to. The S&P fared worse than the Nasdaq yesterday. It was down 25.6 points, or 1.35%. The S&P closed at 1867. It also had an inside day with a lower high and a higher low than the prior day, which doesn't tell us anything about the trend in the market. Trading volume yesterday was above average but below the prior day. The S&P 500 is in a market in correction and is also on a sell signal on our market timing system. I want to take a look at three stocks real quick here. Keep in mind that we're not buying stocks at this point in the market. The market's on a sell signal. What we're trying to do is we're trying to identify where the leadership in the market is right now and where the strength in the market's going to be when the market confirms the uptrend. I don't anticipate that the market will confirm the uptrend for a while here. I think that the market's going to be squirrely for a while, and we may want to just wait for the market to settle down before we begin to get long again. So, looking at where the leadership in the market is, I want to start with Skechers USA. Skechers markets men's, women's, and children's casual dress and athletic footwear via departments and specialty stores. The stock is currently in this late stage base. It's a fourth stage base with a pivot point of $163.60. Gets a 64% checklist rating, and we have this downtrend, which may provide an early entry point in the event that the market confirms the uptrend. Right now, Skechers is holding its 50-day moving average, which is a bullish sign and may indicate that Skechers wants to be a leader in the next uptrend in the market. Next, I want to take a look at Paycom. Paycom provides cloud-based human capital management software that manages employment life cycle for employers and employees. This is an old favorite. We've been watching Paycom for quite a while. Paycom also is in a late stage base. It's a third stage base with a pivot point of $39.75. Paycom tried to break out of that base back in the mid part of August, but it fell back into the base. It has managed to hold its 50-day moving average right here, which is a good sign. And Paycom may provide the leadership that we're looking for when the market confirms the uptrend. Paycom gets a 72% checklist rating. Keep in mind that the market is on a sell signal. We don't want to buy any stocks until we get confirmation of the uptrend. We'll keep an eye on Paycom to see if it does develop some leadership. And the last stock I want to take a look at, Abiomed, develops medical devices designed to assist and replace the pumping action of the heart. Abiomed also has held its 50-day moving average. Abiomed is in a late stage, third stage base with a pivot point of $110.68. It gets a 68% checklist rating, and like we've noted, has held its 50-day moving average in the face of the selling that we've seen recently in the market. Abiomed also has this downtrend that could provide an early entry point in the event that the market confirms the uptrend. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.